Okay, hello folks, ladies and gentlemen. Welcome to the episode 4 of the MAFATA series. So in this episode, right, we will go through, as usual, some macroeconomic stuff, overall market behavior, and then we shall deep dive into the company that we have chosen for this particular episode. Firstly, let's revisit back to some of the company highlights that we have shared. So on holding is one of the trades that we were looking at back in episode 2. Ever since then, the earnings for on holding came out and there was a little negative reaction from the market itself. But however, the earning itself was actually quite strong. So in fact, during this gap down, right, I do hope that some of you managed to take this weakness in price as an opportunity to enter, because ever since the price have declined, you can see that it has recovered about the 17.31%. In fact, if you are looking from a pure technical analysis, you can see the MACD is now trending back up. It is almost crossing the zero line, and it is also almost crossing the signal line itself. And you can see in terms of the technical structure, or the uptrend is still maintained very nicely. And in fact, we did manage to enter our position at $28. This was the trade that was executed on June 5th. So if you are looking to enter along with us based on the trade ideas we have posted, you can join our Patreon in order to receive all these trade setups. So maybe we can take a look at our trade idea from episode 3 as well, which is OKTA. So similar to on holding, OKTA have also declined quite significantly during earnings. But however, the uptrend is still maintained, the support level is still there. And much like on holding, we may start to see this stock recovering as well. Officially, we do not have any position on OKTA for now, but we may choose to enter this sometime in the future if our portfolio allows, or if the technical is much more better than what we are seeing right now. Okay, so this is just a quick review of stuff that we have presented in the past. So let's go on to the topic for today. Let's take a look at the S&P 500 real quick. So the price have rallied from 4,200, which is the resistance level, and it is now crossing above the next resistance level, which is 4,325. Obviously, this rally is actually led by the tech sector, especially the big names like Microsoft, Nvidia, Apple. And in fact, yesterday there was a huge rally on the tech sector itself also. And Nasdaq itself doesn't seem to have any signs of slowing down. It is still chugging along like a huge freight train. It is going up and up and up. Now we may see it going all the way to 15,200. So we want to dive a little bit deeper into the current rally. And if we are looking at the overall sector, I have the 1 week relative performance here and 1 month relative performance here. So if we take a look at the 1 month relative performance, we see technology sector right at the top. This is no surprise. This is definitely due to Nvidia, AMD, the chip sector, the semicon sector, everything rallying. And of course, we also have the consumer cyclical. So when looking at this sector classification, I will be a little bit careful about the consumer cyclical, mainly because the huge portion of consumer cyclical is actually driven by Tesla and Amazon. These two companies have a very, very huge weightage. And as long as these two companies are doing well, this particular data will show consumer cyclical is doing quite well. So that is a little caveat there. But there's a reason why I'm showing you a 1 month relative performance against the 1 week relative performance, because if we look at the 1 month performance, we see technology, consumer cyclical, communication service leading the top. But if we look at 1 week relative performance, it seems like almost every sector is actually green. Industrial is now at the second place. We also have the financial, energy, and real estate catching up. Even basic material have caught up a bit. So the reason why we are seeing this is that perhaps the funds from technology is now rotating into other sector as well. For the past few weeks, the market breadth has been quite narrow. This is mainly because, as mentioned, the entire market is actually pulled up by a handful of technology stocks like Nvidia and Apple and Microsoft. But what we are seeing now is that the overall rally is now becoming broader. It is slowly spreading into other sector, other companies, other smaller market caps like mid cap, small cap, all these kind of other sector. And this is generally considered healthy in terms of a bullish market, because we don't really want to see the entire market supported by that one or two company. We want the whole market to participate. So this is actually a good indicator of what I will assume a healthy bull market. But this is also a sign that if you are looking to buy anything, maybe you may not want to chase the technology counters, but perhaps you can look at the industrial sector. Or maybe you can start taking a look at the financial sector. That is where we may still have value. We may still have companies that have not yet rallied, that is going to rally in the future. Excuse me. So talking about industrial sector, right? You can see this is the industrial sector ETF. It has also bounced off from the support. You can see the momentum indicator are all pointing up. It is currently at the resistance level. So if this uptrend, if this bullish sentiment were to continue, we will definitely see this particular ETF breaking out of the resistance and creating an all-time high. And of course, as part of the big component of the industrial sector, we have Caterpillar. The stock itself actually rallied about 14.7% from the bottom. So this is just to show you that now we have other sector, other companies that are taking part in the rally. And usually the rally will happen in the big cap first. So for example, now that in the industrial sector is rallying, Caterpillar will rally first. Then after all the big cap have rallied, right, it will slowly flow down to the mid cap and the smaller cap. So if you are uncomfortable with chasing companies like Caterpillar, where the significant rally in the stock price have taken place, you may actually look at the mid cap or the small cap sector, where perhaps things have not yet moved, so there are opportunity there. Okay, so now taking a look at the overall breadth of the S&P 500, also this chart is showing you the percentage of S&P 500 company with positive year-over-year price change. And you can actually see that currently right now, as of 9th of June, 50% of the S&P 500 company have positive year-over-year price change. And in fact, if we look back a few weeks, a few months earlier, the percentage of company that is having a positive year is actually quite low. In fact, it is somewhere around 25% like that. 25 to 30% like that. And this is mainly because the overall index is being pulled up by only a handful of companies. But now we are seeing overall improvement in the market that is joining in the rally. We see more and more companies are now becoming positive in terms of year-over-year price change. And if we expect this trend to continue, right, we should see all the lagging companies, all the mid-cap, all the non-tech companies that are lagging behind start to join in the rally as well. So the purpose of highlighting this is that you don't need to always chase the tech sector. And if the market is truly bullish, you will start to see the broad market taking part in the rally. And if, let's say, the market is not that bullish, it is just a handful of companies rallying, and if those companies are going to crash sometime in the future, right, then of course there's no point in chasing all these technology counter anyway. Okay, so that is the point of looking at all these so-called the overall market breadth. So talking about broader market rally, you can take a look at the Russell 2000 also, because the Russell 2000 recently just broke out of the consolidation that has been ongoing since like the end of March all the way until end of May. So there was a 2-month worth of consolidation, and now it is breaking out. And hopefully going into the future, we may see S&P and Nasdaq kind of taking it slower or going sideways a bit while the Russell 2000 catch up to along with the entire market rally. Okay, so this week we have the FOMC coming up as well. Currently, the probability for rate hike is at 24%. 75.8% of the whoever is in charge of this survey feels that there won't be any rate hike lah. There will be a pause. I personally think that there will be a pause as well, but this is not something that I want to go through in this particular video. We will definitely make another video once the FOMC is over and what we will update some of the information that we gather and what we think of the market moving forward. But for now, this is just to share with you that we have FOMC coming up soon. Okay, so the company that we are looking at today is actually First Solar. So it's a company that makes solar panel, manufactures solar panel. It is the largest solar panel manufacturer in US. So not only that, recently there was IRA tax credit that came out that is going to provide a lot of tailwind for the entire clean energy sector. So we are looking at a very small sector with a lot of tailwind that is incoming. So now let's look at the quantitative of First Solar. So this quantitative is taken from all the listed solar panel manufacturer. We can see that the average revenue growth for the sector average is about 25.31% for 2023, 19.78% for 2024. But First Solar actually have a much higher than average revenue growth for both 2023 and 2024. But what we want to focus on is actually the earnings growth. So for earnings growth in 2023, the sector average is about 29.89%, but First Solar actually have a 100% earning growth. And in the upcoming year, 2024, First Solar is going to see about 77.33% earnings growth compared to the sector average at 44.32%. So this is actually a very aggressive earnings growth that is coming in. And of course, if you take a look at the chart of the First Solar, which we will go through later, you will definitely see the stock have actually rallied quite significantly from the beginning of the year. And this is mainly because the market is pricing in majority of this earning growth already. But as traders, we need to identify if all these earning growth that are being projected is actually attainable. There's no point in projecting a very aggressive growth, but at the end of the day, you cannot meet all this expectation. And then, of course, if that's the case, then the stock is going to dive like crazy. So we must be able to find sufficient evidence to support all this projected earning growth that we are able to dig out. Okay, so firstly, let's take a look at the revenue, the income statement on how this company have done in the past. So obviously, looking at what we are seeing here, year 2022 is not really that great. The total revenue is actually at 2.62 billion, which is a 10% decline from 2021. But not only that, the cost of goods sold has actually increased to 2.49 billion, even though the top line revenue have declined. And at the end of the day, they have a loss making. The net income was negative 44 million. So they were loss making for 2022. So they have actually listed down some of the reason why they were not performing that well. And it does seem that these are one-off events that we should not be seeing again in 2023. So here, net sales for 2022 decreased by 10% to 2.6 billion compared to 2.9 billion in 2021. This decrease in net sales was primarily attributable to sales of certain projects in United States and Japan in the prior period. And the prior period settlement of an outstanding indemnification arrangement associated with the sale of one of our volume and decrease in average selling price per watt, blah, blah, blah. So there was some specific project that basically there was some specific project that they took up that wasn't really as profitable. And at the same time, there is a decrease in average selling price per watt. So due to the huge decline in net sale, the gross profit suffered quite bad, where they were looking at 25% in gross profit margin in 2021, but in 2022, it dropped all the way down to 2.7% in gross margin. So once again, this is due to some of the bad projects that they have taken. There was a decrease in average selling price, and there was also increase in costs such as the sales of freight, detention charges, impairment, all this kind of stuff. But looking at the latest quarter, which is the Q1 2023, right, you can see that things are somewhat back to normal. The gross margin have now increased back to 19.92, which is, although not as high as what they have seen previously, but it is back to the normal level. And same thing for profit margin. The overall net margin itself is at 7.76, which is a lot better than what we are seeing previously. Okay, so previously it was negative 7.8, negative 0.75, but now it is somewhere back to normal. And also for First Solar, majority of their sales are quite seasonal. The big bulk of the sale usually come in the Q3 and the Q4 of their fiscal year. So within Q1 and Q2, right, they will not really see a big revenue growth. That big growth will come in during Q3 and Q4. So it is good to look at the overall volume of product that they are actually selling, because that will let you know whether if they are doing well or if they are not doing well. Okay, so now if you look at towards the bottom in the box, right, you can see the amount of megawatt produced and megawatt sold. So they classify their sales in terms of megawatt, mainly by how much worth of energy have they manufactured in terms of the solar panel, and how much have they sold in terms of the energy matrix unit, which is the megawatt. So I think they believe that that is a fair method to identify or to calculate the amount of product that they are selling. Okay, so what you can see here, right, the megawatt produced, it is increasing almost every quarter, from 2,079 in Q1 to 2,199 in Q2, and then 2,388 in Q3, and 2,411 in Q4. So what you can see is that if you look at the megawatts sold, you can see sometime in Q4, they actually sold more than what they are producing. So in fact, we can see that there's actually a capacity constraint now, okay? That they are actually selling more than what they are producing. And as I mentioned earlier, Q4 is actually one of their highest sales period. Q3 and Q4, that is when majority of their sales are coming in. And every time when they reach the Q4 period, they do not produce enough to meet all these demand. And not only that, right, Q1 is actually considered the weakest quarter of the year, where they don't really see so much sales. But if we compare the current Q1 for Q1 2023, and if we compare it back to Q1 2022, there is actually a 51% increase in the amount of megawatt being sold. So in Q1 23, 1939 megawatts sold, compared to Q1 2022, only 1284 megawatt that is being sold. So there's actually a huge growth that is coming in. And in fact, if we were to extrapolate this growth, right, going forward to Q4 of 2023, we may be seeing close to like 4,005 or maybe even 5,000 megawatt that is being sold. So the thing is, they must produce enough. They have to produce enough to meet all these sales, because if they do not produce and meet the demand, then they are going to lose the market share. Some other player out there will just take up the market shares, and these are all the profit that they are going to lose. So what we can tell from this is that yes, there is actually a lot of demand, but can First Solar meet this demand or not? Are they able to increase their manufacturing capacity to meet all this demand. And if they are able to meet, if they are able to produce enough to sell whatever that they have produced, then in fact, we will see a huge growth in their sales number, a huge growth in their profit number, and that will definitely lead to a rally in the share price as well. So now, looking at the backlog as well, if we look at the latest that they have reported, which is April 27, 2023, this particular the last bar in this picture that you see, they have a backlog of 71.6 gigawatt. Okay, so this is gigawatt, this is not megawatt. Just now we were looking at a few megawatt, but they actually have 7.16 gigawatt worth of backlog that they have, and they are supposed to sell all this backlog all the way until 2029. So they actually have contract all the way until 2029 where these backlog are being contracted. So in terms of backlog, right, it is actually a quite healthy volume, and of course, if going forward the demand increase, we will expect this backlog to increase as well. And we also hope that the First Solar is able to increase the manufacturing capacity also in order to turn this backlog into actual revenue. Because yes, you have a huge amount of backlog, but if you are not able to turn them into revenue because you are not able to meet the demand, then the backlog is mainly I will say it is of no value. You must be able to turn the backlog into actual revenue. So speaking about capacity, I think they are also aware of that. They are very well aware that there's a lot of demand coming in. They are going to be expecting a huge amount of sales in terms of megawatt when it comes to their product. So actually, in India, right, the plant in India is supposed to complete by the second half of 2023. So maybe it is going to complete right now. I don't know. We are somewhat close to the end of quarter 2 already, okay? And in fact, recently in quarter 1, they have one of their another plant went online. I'm not sure which facility, but it just went online, and now that particular facility is now contributing to all this increase in production capacity. So we also have two facility that is going online in 2024. The Alabama one expected maybe around 2024 and 2025. So we are seeing evidence of all these new facility that are being constructed in order to meet this demand. And that is great news because as the biggest manufacturer of solar panel, right, First Solar definitely want to take the lead in terms of market share, and they want to capture as much of the market share as possible. They as long as there is demand, right, they must be able to capture them instead of letting all these future revenue goes to their competitor. So because of all this huge forward demand, right, they actually have a very aggressive sales guidance and operating guidance. So if we look at net sale for 2023, they are projecting a net sales of 3.4 billion to 3.6 billion. And if we look at the operating income, they are actually projecting 745 million to 870 million. Okay, so now why is this number important? And it is important because it's actually a big number compared to what they are achieving in the past. It is actually a very, very big number. Okay, so let's take a look back at the income statement again. Previously, we have looked at it, but let's just take a quick look at this again. So now, as mentioned, they are projecting a total sales of 3.4 to 3.6 billion. And if you look at the total revenue here, they have not once hit that level of growth. And currently from 2022, where they have 2.6 billion in total sales, the projection is they need to get another 1 billion in order to achieve the 3.6 billion, which is about the midpoint in their forecast. And 1 billion is not a small amount in sale. It is maybe we are looking at about 40% increase in revenue growth, and that is actually quite a big deal. It's actually a big amount. And there was one point in 2019 where they have cracked above 3 billion, but it's only by a tiny bit, 3.06 billion, but now they are projecting 3.4 to 3.6. So if First Solar is able to achieve that level of revenue growth, we will definitely see the stock price rallying like crazy. And next, let's take a look at operating income. For 2022, operating income was actually negative, loss-making. And in fact, the best operating income that they ever gotten was 2021 with 460 million operating income. Okay, so how much are they projecting? I'm just going to flash the projection slide again. They are projecting 745 million to 870 million. This is positive, okay? So not only we are going from loss-making to positive, the amount of operating income that they are projected is about 70–80% higher than what they have done in the past compared to the 460 million. So that is a very, very aggressive projection as well. And as mentioned, right, when they make such a huge forward guidance, a very aggressive forward guidance, you definitely want to go and check in to see why they are being so confident, and do we see any evidence that they will be able to meet this kind of guidance or not. And from what we have looked at, the amount of demand that they have, the amount of backlog that they have, and they have also proven that they are aware of the incoming demand. They are actually expanding their manufacturing capacity. We can somewhat sort of say that yes, in fact, they probably have a good chance of meeting that aggressive guidance lah. Okay, so taking a look at the technical, we can see that the stock actually have declined quite a bit from the top $230. It have declined all the way down to $196, where it is very near the trend line. I would say the support level is somewhere around 175. The next support is around 160. But overall, on the momentum indicator, we are not really seeing a recovering in upward momentum yet, but I do feel that it is going to come in soon. So the technical is not really that aligned, but we are somewhere at the swing level and at the trend line. So we may be able to enter this particular trade very soon. But of course, we do want to wait and see a bit. We do not want to prematurely jump in. And I do believe that the 175 support, it will be maintained. Worst case scenario, it may go down all the way to 160, but I think 160 will be the final level. Final level as in, if for this uptrend, for this optimistic outlook to be maintained, the stock should rebound at 160. And if it start to fall way below 160, then we may need to relook at the fundamentals again. And if you are holding the trade, if it falls beyond 160, maybe you may want to consider cutting. So these are the level that you can plan your trades, setup around. Okay, so that is the end for today's sessions. If you are interested in when and how are we going to take the First Solar trade, you can actually consider subscribing to our Patreon. We do share a lot of trade ideas quite often, quite frequent. And of course, if you enjoy our content, do give our channel a like and do subscribe to our channel. Once again, thank you very much for listening, and I shall see you guys again in 2 weeks' time. And of course, in the meantime, we shall take a look at what FOMC will be stating. They'll be releasing a new projection material, and do look out for our FOMC update video as well. Okay, guys, thank you very much and have a good week.